Greetings, empowered investors. We are coming to you from Irvine, California today, where we just finished a fantastic Empowered Investor Live. And one of our great speakers was Mr. Mike Maloney, who is with me right now. If you're watching on video, you see him, obviously. And it was a great weekend, great event. We had so many people here just enjoying it, networking, making new friends, making new contacts, and learning lots and lots of things. I just really appreciate Mike being with me. We were just having a little bit of breakfast together. And as you know, probably, Mike Maloney is a fantastic author and educator on monetary policy, the history of money, the Federal Reserve, and all of this absolute craziness that we have to deal with in our lives. Mike, how you doing?
I'm doing great. And that was an awesome event. Yeah. I just had a great time.
Yeah. And thank you for being one of our keynote speakers. We really enjoyed you.
Yeah. Well, you need somebody to bring the gloom and doom. Jason always talks about, don't fall for the gloom and doomers because you miss out if that's just your total life. But I don't see what I present as gloom and doom. If there's gloom and doom on one side, there's opportunity on the other. And so the information that I presented had to do with the economy and where it might be headed in the short term.
Absolutely. And by the way, we would be remiss if we did not talk for a moment about the absolute scary craziness the stock market is going through the last few days.
Yeah.
I mean, why don't you speak to that for a moment? And as you do that, I'm going to check the stock market. I have not checked it today on my phone. But, look, I'm not a stock guy, as you know, but it is definitely an indicator of what's going on with the economy. So it looks like the S&P is up a little bit. The Dow is down. Everything was down last week. The last few days of last week, it was red on all indicators. But
what was interesting is it started to look very much like the 1987 stock market crash. And after closing on a Friday, when Black Monday happened, that was the single largest percentage drop of the stock market in history. And the charts, the up and downs and the patterns that it makes was almost identical for like a 2-year time frame between today and 1987. So good, it broke that. I was saying it'll probably bounce tomorrow, or today now.
Yeah. So it bounced a little bit, but look, Mike,
the thing is, though, the public is more exposed to stocks than at any time in history. The percentage that the individuals own is greater than at any time in history. And the stock market, there's only one way that you can measure it that doesn't show us in the greatest bubble in history right now. And that's PE ratios. And that shows us as being in the third greatest bubble.
Mm-hmm. So, yeah, PE ratios are pretty high, but you're saying they've been worse before, or higher, or more out of whack, I should say, before, right?
Yeah. The NASDAQ bubble in particular.
Yeah, good stuff. So, what do you think this is showing us in terms of all the craziness that's going on with the stock market for the overall economy? And what are your predictions on the stock market? And I should say, the few of you who don't know Mike Maloney and his legendary work, he's a sound money guy. He runs goldsilver.com and he likes hard, sound money. You don't like the financialization of the economy, the fiat money situation we're in.
The way our monetary system works is currency creation is now based on theft and fraud and enslavement. Years ago, we had a gold standard. And the gold, I don't like gold standards. I like gold. It's the least dumb monetary system that we've ever had. But the modern monetary system, when we were under gold, to create a gold coin and save it up to buy a house, it took a certain amount of work. You had to prospect for a mine and then turn that claim into a mine and then dig up 30 tons of dirt on the average to get 1 ounce of gold. 30 tons of ore, there's about 1 ounce of gold in it.
That's a lot of energy and a lot of work to get to that gold.
And then you have to refine it and pour it into a bar, and then the bars get melted down and minted into coins. Now, that creates the currency, and there's a certain amount of work in that currency. If you then work to save up to buy a house, you've got this stack of coins, and the work that you've got to put in pretty much equals the work that it took to make those coins. Mm-hmm. And then you're going to buy a house, and the chopping down of the trees and the digging up the cement.
That's all energy.
And paying all the guys to hammer that thing together. these three different things. It was a fair trade each way. The amount of energy required to have that purchasing power, that stack of coins, equaled the amount of energy that went into building the house. Today, the way the monetary system works, most people don't know that about 92% of the currency supply is bank credit. If you've got something digital, if it's in your bank and it says you've got a certain amount of dollars, the bank created those, not the Federal Reserve. The Federal Reserve only creates bank reserves, which we never get to touch. That's a separate monetary system. And they create the paper notes, the Federal Reserve notes in your wallet. And so
otherwise known as dollars, the Federal Reserve notes.
Right. And so the way that currency is created now is you go out and you find a house you want to buy, and it's $1.2 million. Go to the bank and you say, I found this house and it's $1.2 million. I need to borrow $1 million. And the bank looks at you and they say, well, you've always paid your loans in the past. And they look at the collateral and go, yes, you've got the right loan to value ratio here. And so, yes, we will loan you $1 million. And they type new dollars that did not exist before, that there is no work put into to create into existence. They credit your checking account with them. And when you pay the seller, those new dollars that are empty, basically, have no real purchasing power. It's like counterfeiting. It steals purchasing power from all of the rest of the currency that's out there in circulation through inflation.
Couple things I want to just point out here. Number one, the rabbit hole of understanding how money is lent into existence is really interesting, and everybody needs to understand. It's hard to get your head around it. It's such a crazy system, but money is lent into existence through fractional reserve lending or fractional reserve banking. I guess you could call it either one. Now, when we talk about how that causes inflation, is you create new currency units, limited supply of goods and services, more currency units chasing those. And, as I always say, and I said yesterday from the stage at Empowered Investor Live here, is that there are two primary value drivers for everything. And I don't know if you agree with this or not. I'd like to, challenge me on it if you don't agree. But the two primary value drivers are scarcity and utility. That's what makes anything valuable, right? Is how scarce is it and how useful is it? Money is not scarce, or currency. We should distinguish that, right? Money, things with intrinsic value, whether they be precious metals or building materials, those have intrinsic value because they are used by every human on earth. We all need food, clothing, and shelter. They have intrinsic value. It doesn't matter what currency you're trading them in. They're valuable because they exist. And so scarcity and utility. So maybe you can kind of speak to a couple of those things for a second.
Sure, I will. But I do want to mention my last book, Great Gold and Silver Rush of the 21st Century, deals a lot with this. And there are a couple of free chapters. Chapters 3 and 4 are online. They're available for you right now for free. And you can download them, send them to anybody you want. I just want as many people to see.
Where do they go to get that?
That would be ggsr21.com. So it stands for Great Gold and Silver Rush of the 21st Century, ggsr21.com.
So that's for the free chapters.
Chapter 3 is it's a primer on how to read charts. And anybody that's got a chart in an article, you really got to look at that chart, because typically they'll do something to manipulate it and put a spin on it to try and prove their point. But you are being manipulated if you don't know how to read them, if you're fooled by them.
And well, what chart are you referring to? Any chart?
Any chart that somebody makes. There's like, if you change the scale on the side, instead of starting at 0 to 100, it goes from 90 to 100. It can make a little tiny correction that you can barely see on the chart actually look huge.
Right. Yeah.
And if you put two scales on the chart, you've got two lines on the chart. If those scales aren't, if they're different, again, they're lying to you.
Yeah.
And it's entertaining. It's a fun chapter. Then the hardest chapter is the one on how currency is created. And that's what we were just talking about. And it is a deep dive into the Federal Reserve. And I take apart parts of the Federal Reserve Act. And I'll quote this whole page of Federal, and then I'll just highlight some words in red. And you read the red words and you can understand what they're actually saying in this thing. And our modern monetary system is actually quite evil. It is based on fraud, theft, and enslavement.
Yeah.
When they type currency into existence, that did not exist. And by the way,
and you said type
yes,
currency into existence. That was interesting. Yeah. We're typing it rather than mining it.
Exactly.
Yeah.
You said that it's loaned into existence.
Yeah.
And the Bank of England finally confirmed this several years ago when they said, the old fractional reserve model that was taught in schools that I learned when reading Milton Friedman and great economists is you deposit $100, the bank keeps 10 on hand in case you want some of it and loans the other 90 out. That's not true. They cannot loan a liability, and to the bank, your deposits are a liability.
Oh, interesting. That's interesting.
And so the Bank of England said, no. Loans create deposits, not the other way around. Yeah. Deposits do not create loans.
Right. What everybody needs to understand is that when you look at a balance sheet of a bank, it's flipped.
Yes.
It's not like we think of it, right? When a bank has a deposit, that's a liability for the bank, not an asset, right? You'd think like if you have money in your account, that's an asset, right? A deposit is an asset to you, but it's a liability to the bank. The loans the bank makes are the assets of the bank.
Exactly. Yeah. And a liability.
It's reverse of the way we think of it. Yeah.
Right.
Have you ever wondered how the top real estate investors consistently find the best deals before anybody else? Well, listen up, because this can transform how you invest. I'm excited to share something that's revolutionizing the real estate game. It's called Connected Investors. This is a really cool platform that gives you access to all of the property records nationwide. Truly amazing. It's not just a platform, though. It's a secret weapon. It does a whole bunch of things. Besides the property data, it's a social network as well. It's built by successful real estate investors for real estate investors. Find off-market deals instantly, access accurate ownership contact info, make smart data-driven decisions, and secure funding for your deals from a vast network of private and hard money lenders. Whether you're a beginner or a pro, Connected Investors is your go-to tool for smarter, faster, and more efficient investing. Try a 7-day free trial at jasonhartman.com/connected. Again, that's jasonhartman.com/connected. And let us know how much you love this software.
So anyway, what was the...
They can't lend a liability, which is a very interesting concept. So the deposits they have from all of us are their liabilities, and they can't lend that. The way they get money to lend is by creating it, by lending it into existence.
Which causes inflation because there was no work or effort put into creating these new units of currency. So basically, it's the same as counterfeiting. If you print a bunch of notes in your basement and go and spend them, you're getting purchasing power by diluting the currency supply. So you're stealing from everybody in society. Yeah. And so this is the way that the banks operate. They steal from everybody in society. That is what causes inflation.
So my solution to that, of course, is inflation-induced debt destruction, but it could be used in lots of ways. I teach it for use with income property because you get long-term 30-year fixed-rate debt against hard assets, those commodities, those materials that are used to build the house that have intrinsic value. Your way is own hard assets and that require a really, and I'll borrow a phrase from the cryptocurrency world, the Bitcoin world especially, but proof of work, right? There's work that goes on to create these assets like gold, silver, construction materials.
Now is the time to be in real assets. If you're in the stock market, I would really do some research on this and consider changing that purchasing power into something like real estate or precious metals or something that's real. Something
real. That is the key point. Mike, you mentioned a few times the modern monetary system and how it's evil and corrupt, and you're certainly right about that. But you made me think of modern monetary theory, MMT. Oh. Yeah. And now this we've talked about on the show before. We've interviewed some experts on MMT. And, ultimately, I think it's a fantasy. But it is pretty darn ingenious the way that circular system works. The Federal Reserve is created. Almost immediately after that, the IRS is created to, I believe, the modern monetary theory people are actually right about some things. They had to create demand for the fake dollars, right? For the fiat money. And the way they create that demand is by putting people into debt because you have to pay the debts back in the same currency units, and taxing people and requiring that the tax be paid only in the currency units.
Right.
It's pretty ingenious. You got to give them some credit, right?
Yeah.
Yeah.
It's they've got you on this treadmill,
right,
and you can't get off. So
yeah. But your thoughts on modern monetary theory, like in general,
if you're looking at it from a distance, it seems like, well, this might be able to work.
It's this circular system,
units for people, and then if there's too much currency in the supply and there's inflation, you can just increase taxes
and suck up the excess.
It's still an evil wealth transfer.
Mm-hmm.
The taxes aren't going to be increased evenly. It's not everybody that's going, the people that are on assistance are going to be getting something for nothing. And that purchasing power, that economic energy, I call it, has to come from somewhere. So it's coming from people that produce more than they consume, that actually are responsible for the prosperity in society. And the more that we take from them, the less they're able to create jobs and so on. I used to live in California, and it took years to become successful. I became very successful, and right away my taxes were up at 52% because I wasn't
combined state and federal taxes.
Yeah, I wasn't doing real estate where you've got all the tax benefits. I was doing business. So I left California, but I've created hundreds of jobs in my life.
Yeah, me too.
Other people don't create jobs. And when you create jobs, it lifts all of society up. So basically, modern monetary theory, I believe, is a fraud and another form of wealth transfer. And it's a top-down, centrally planned type of thing. And it's a wealth transfer. And throughout history, everything that is centrally planned does not function as well as something that is just free market. It's the sum of all of our transactions that are going on, human interaction. That is always much better at creating prosperity and creating a world worth living in.
Yeah, that's a great way to put it. That's an excellent way to put it. All right, Michael Maloney, thanks for joining us today. Tell them where they can get those free chapters again.
GGSR21. And if you're interested in precious metals, go to goldsilver.com.
Good stuff. Thank you for joining us, Empowered Investors. We will see you on the next episode. And until then, happy investing.